Let's look at the U.S. stocks index. Let's get on this. Valentine is serious business. Don't mind if we need to look at the index for that. Look at the stocks index. Futures pointing to a lower open today on Wall Street. Dow Jones about 20,369 about 2 hours ago. The S&P 500 2324 and the Nasdaq futures 5255.5, all below 0.1%. Today we're looking at a number of economic data. Janet Yellen's testimony before the Committee on Banking, Housing and Urban Affairs due to commence at 10 a.m. Eastern. We're also on the data front. The NFIB Small Business Survey is due at 6 o'clock in the morning. That should be out by now. And the PPI, that's the Producer Price Index, said to be out at 8:30 Eastern. That's about on tap in the next 30 minutes or thereabout. On the earnings front, Discovery Communications, Dr. Pepper Snapple, and T-Mobile US are among companies to report before the opening bell. At the end of the market, we're expecting AIG, Express Scripts, and Lending Club to roll out their Q4 numbers. Good evening in Asia, where most of the markets were lower today as investors trade cautiously ahead of the Fed Chairman's Janet Yellen's two-day congressional testimony starting on the Capitol in about 3 hours from now. And they're waiting for Yellen's comments on banking regulations and potential hints of the Fed's rate hike trajectory. The Australian ASX 200 closed 0.1%. The mainland Chinese market were flat after latest data shows China's consumer prices, what's called a PPI, was up 2.5% in January 2017 year on year. That's the highest since May 2014. The Shanghai Composite closed nearly flat, 3218.38, and the Shenzhen Composite effectively unchanged at 1964.32. Hong Kong's Hang Seng Index was flat mid-afternoon. The Japanese 225, that's the Nikkei 225, dropped 1.13%. In South Korea, the Kospi was down 0.2% as the political scandal involving the impeached President Park dragged on. The European Commission has raised its estimates of China's economic growth above 6% for 2017 and 2018. The forecast report estimates that China's economic growth was 6.7% last year, primarily because of strong consumer spending. The report also expects a slight slowdown of the Chinese economy this year and next. In the latest winter forecast, the Commission has raised its outlook for China's economy to 6.4% for 2017. That's higher from the 6.2% listed in its autumn forecast, while anticipating Chinese economic growth would maintain 6.2% in 2018. The Commission also expects a little bit of a tepid risks for China's economy this year and in 2018. We're back on the African continent, where the managing director of the International Monetary Fund, Christine Lagarde, says Egypt is making good progress in its $12 billion loan program with the Bretton Woods institution, and the local currency, the Egyptian pound, may be stabilizing after plunging to record lows. Last November, Cairo agreed to a 3-year loan deal with the IMF, which involved tough economic reforms such as cutting its budget deficit and floating the Egyptian pound. The currency plunged as low as around 19.5 to the US dollar in subsequent weeks. That's about 50% of its previous value. Financial markets are closely watching how the government keeps to the terms of the IMF deal, which will determine whether Egypt received loan installments on schedule. Christine Lagarde says the IMF expects to complete its first review of the program around June this year. Okay, we're sticking with the currency story in Egypt, while the currency flotation, that's the introduction of VAT and 2 huge hikes in customs tariffs, have pushed inflation in Egypt to historic highs above 23%, making way for local production to flourish. Watch this.
At Egyptian chocolate maker Covertina, business is booming. Chief Executive Mustapha Said Salam says production had risen 19% in 2016 from the previous year. Since the pound dived in November after currency flotation, shoppers who traditionally preferred everything foreign have ditched pricey imports to buy local.
Egyptian products were able to move themselves in the market at the same quality of imported goods, and also importers of chocolate, say for example products from Turkey. After the flotation of the currency, it became hard for importers to sell the chocolate at the old prices. and therefore consumers were forced to turn to local products which enjoy the same quality as the imported ones.
The pound's flotation and an ensuing increase in tariffs on more than 300 products shipped from abroad have hit importers hard. But the measures have been a boon for domestic manufacturers such as Covertina. Egyptian-made products are much more affordable for customers who are increasingly price conscious as inflation has shot above 28%. After Egypt abandoned its peg of 8.8 pounds to the dollar on November 3, the currency has roughly halved in value to around 17.75. Floating the pound helped Egypt secure a $12 billion IMF loan in return for a reform program that includes tax increases and electricity subsidy cuts, driving up inflation. Egypt also raised customs tariffs on many luxury goods to more than 50%, plugged customs loopholes, and tightened quality controls in an effort to rein in trade deficit.
Switching to local products has increased by 90%. Firstly, because of the difference in cost. The quality of the local product is also considered very close to the imported. In some products, you can compare the local and imported and not find much difference. But Egyptians are obsessed with everything foreign.
Multinationals are taking notice. Nestle, the packaged food giant, said in January it had signed a deal to acquire Caravan Marketing Company, as Egyptian instant coffee maker that had increased its domestic market share due to competitive pricing. With Egypt long dependent on imports, the trend suggests the government's efforts to narrow a big trade deficit and boost domestic industries are starting to work.